Today, I am talking with Steve Bugg. Welcome, Steve.
John, thanks for having me on. I'm really excited to have this conversation with you today.
Well, I'm glad to have you on. And before we get started with the questions that I've put together for you, please tell us a little bit about yourself.
Sure, be happy to do so. So Steve Bugg, President and CEO of Great Lakes Credit Union. We're a state-chartered credit union in Illinois. We are federally insured. We have over 100,000 members nationwide, 250 employees, 22 branch locations, and we are a low-income designated credit union and a community development credit union. And we're really focused on the mission work that we do in the communities that we serve and that people helping people philosophy, which includes starting youth very young to really value savings and starting to learn good behavior around financial literacy. So it fits well with our discussion today, John.
Yes, it does. And it is a very good segue to my first question, which is, our listeners should know that we are partnered. GLCU, Great Lakes Credit Union, offers Money Mammals accounts for younger kids and adolescents, for tweens and teens. And I wanted to ask you, what are you seeing, whether in kind of usage data or member stories, so quantitatively or anecdotally, about how these programs are changing the way young members think about saving and spending, and talking about money at home? And ultimately, I'm just curious to know what convinces you as a person, as a CEO, that starting early really moves the money smart needle.
Yeah, great question, John. And I think the partnership that we've embarked on really helps us utilize innovative tools and resources that really help youth today get on the right track. And we know that if we can early on impact that behavior over their life journey, the hope is that they'll tap into those past tools and resources that are provided to them. And one thing that we've really enjoyed through Money Mammals, for example, John, is the interactive nature that guardians can start their youth really young by logging onto the website, utilizing some of those tools and resources. But equally, we take that content and we bring that out to where the youth are. So we've had great success as bringing it into local schools, also going to after-school programs. This summer, we're utilizing that content with the park department for their summer camps. And then we also partner with a lot of nonprofits throughout the year that will bring in students. Maybe it's an after-school program, a weekend program, and we're part of that routine of providing a benefit or a value. And ours is that financial literacy in a fun, interactive way. And one thing that I really enjoy when I get out there with the team and participate in these, and typically these are sessions that we'll schedule week after week. And so we'll go in and the kids are singing from the videos that we show, right, of the Money Mammals. And I just laugh because they remember what we've talked about the week before, but they're so engrossed into interacting with all the Money Mammals and seeing them perform on video and then relating that back to the lesson of the day and how they can learn a little bit more about saving and why that's important for that age. And then also that ability to pre-package information that then they can take home. So the nice thing is with Money Mammals is it's interactive. There's tools, there's resources, but there's also in-person exercises that we do, and then they're able to bring that home, right? And then discuss that with their parent or their guardian. And then they'll share with us some stories about how perhaps their parent or guardian have helped them save in a piggy bank, or they've put the money in different buckets for different savings, and maybe they completed some chores. So also, I've utilized that same philosophy with my 6-year-old grandson. So I've utilized the tools and resources from Money Mammals to help my son, daughter-in-law with their son, and then lifted from the content. a lot of those same resources and educational tools that we use with that program as well. I also think that it's a great way to start building that foundation, and then you can step up to adolescence. And the adolescence program is really important because we at Great Lakes Credit Union, like many other credit unions, will also use Bite of Reality in conjunction with adolescence. And then we also offer a Bank On certified account, and we'll use that to get those younger members engaged with us because they can get a debit card. There's no ability to overdraft or NSF that National Certified Bank On account. So it's a great way to start. So we've been able to basically build upon that foundation of Money Mammals, Adolescence, Bite of Reality, and they're all interactive programs, and then layer in the right type of financial product and service for that respective age group, whether it's just starting out with a savings account, then graduating into a transactional account with a debit card or debit card number, right? Because most of them will put it in a wallet today. And so I like that ability of helping people build that financial journey and providing, from a credit union perspective, those resources through the website, but also taking that out into the community. And it fits our strategy of that mission-based work that Great Lakes Credit Union, under the People Helping People philosophy of credit unions, is really known for in our market area.
Well, that was a great, interesting, comprehensive answer, Steve. I appreciate it. And I have 3 follow-up questions. The first one is, so this is interesting that you talk about being a grandfather. We're on the Art of Allowance podcast. So I always like to jump into, I love talking to people who are money experts like you are, also parents, but very often, in your case, both parent and money experts. So my immediate question is, you were saying how now as a grandfather, you're bringing in some of these ideas you've seen with the Money Mammals program. But what I was curious to know is how things have changed in the way that you raised your own kid from any kind of money smart perspective, and how your perspective may have changed. And feel free to go as deep as you want with what your program was or wasn't with your son, and then kind of anything that he is doing, your son, with your grandson, and anything more that you want to talk about in terms of the difference between how you went about it as a father and how you're going about it as a grandfather.
Yes, and I would start by saying certainly today there are many more tools and resources available than there were when we raised our son, or even when my wife and I were raised, right? So if you think about even the evolution of the financial industry and the products and services, and going from traditional to digital, right? And what that has brought. And I think from the perspective of our son to our grandson, right? When our son grew up, iPads really weren't as common as they are today. And the content that is provided today on iPads is such more impressive than it was a few years ago or many years ago. And so for our grandson on his iPad, we've been able to load these interactive educational programs and tools where he can sit and play with that iPad and learn. And so in the past, with our son, we took much more of that traditional approach on, here's a piggy bank, here's how you save, here's the value of saving. So I think even those traditional concepts are still in play today, but they're presented in a more interactive format, which is what children today are used to, because that's exactly what happens in the classroom, where they have a computer or an iPad, they're interacting with their teacher that way, they're learning their own programs. And so I also take that back to Money Mammals. I think that's why that interactive and that gaming component is critically important today. And it's a fun way to get those youngsters engaged in saving and learning. Whereas in the past, let's face it, it was probably a bit more boring in that traditional model, right? Concepts are the same, But again, I think even the way, if we think about educators, the way that they've had to change in the classroom, our daughter-in-law is a elementary teacher. And so she's had to evolve in the way that she teaches. Same thing in financial literacy, right? It's utilizing the tools and the resources today in that environment. And really then going back and saying, all right, now how do we reinforce that? So we gave our 6-year-old grandson early on a piggy bank. And then, for holidays or birthday, giving him money, having him deposit it into the piggy bank. And then as that piggy bank fills up, working with his parents to open up a savings account, taking the piggy bank to the local credit union branch, depositing that, and then watching that grow. And then talking more about, well, you invest that into the credit union's paying you dividends. So you're getting money back. But then also tying in the value. So as he gets a bit older, tying in the value of, well, how can we assign some chores or work to do and then compensate you for that? And again, putting that back into the piggy bank and then replicating that same process. Now, in the traditional days, did we do the same thing with our son? Sure. But I think the tools and resources just are much more interactive these days. And there is so much going on today in a kid's life, right? Versus perhaps the way it was many years ago. How do you compete with that, right? How do you work through that noise? And so being there and interacting with them through the iPad or through a computer is a way to kind of fit in our programming today in a meaningful manner versus just that traditional manner that we had before. And one thing, I'll go back to Bite of Reality for a minute. Just in the last year and a half, Bite of Reality made their program much more interactive and app-based versus the traditional paper. And so just think about that. That has only changed, let's just say, in the last couple years, right? But we get much more engagement now by having that Bite of Reality app than we did when we had the traditional program that was offered.
Hey, Steve, this was one of my other follow-ups. Can you explain to everybody what the Bite of Reality is in case they don't know?
Sure. Bite of Reality is a nationwide program, and it really takes real world life examples and makes it interactive through the app. So each individual is assigned a persona, and that persona has different life events happen to them. So it's, how do you earn money? How do you budget? How do you save money? What if there's an emergency that comes up? And then it teaches them also about, well, what are you spending your money on? If you need clothes, are you buying designer clothes? Or do you shop where maybe it's more thrifty, right? It's also about buying a vehicle. Are you buying the sports car? Are you buying the practical car? What if something happens to that vehicle and you have to rely on that transportation to get back and forth to work or school? So Bite of Reality really is focused on more of those junior high, high school, freshmen in college. And it works well, especially now because you have the app and it's interactive. But it's amazing when we participate out on site and offer the program on, folks will be like, oh my gosh, you mean I can't spend all that? I have to save something for an emergency? And so it's a great program. It does supplement a lot of what our students today don't get in the classroom. So they may get a little financial education depending upon what state you're in and what's being mandated. But it's a nice overlay or replacement if the state doesn't offer those type of programs to the youth of today.
Yeah, great program. The other question I wanted to follow up with you on, since we're talking about schools, is one of the challenges that some of our partners will have is actually getting into the schools, right? And schools will sometimes think that letting an institution into the school can be problematic because the institution is just going to be promoting itself and not necessarily promoting money smarts and financial literacy. Any kind of advice that you can provide, or why is it that you were so successful in being able to get your amazing team into schools in your area?
Great question. A lot has to do with networking and relationship building and really finding that champion at that local school that is willing to listen and giving them, and you hit it right on the head, John, it's that opportunity to provide content, and we'll share that content ahead of time to show them that it's not a commercial for Great Lakes Credit Union. It's not a commercial for credit unions or specific banks. It's about providing an educational resource that can be utilized and supplemented in to the programming at that school. And so, yes, we'll talk about savings accounts, checking accounts, we'll tie in what we're offering, but those same products and services are going to be offered at other credit unions or banks. So we view it as part of our work is to get out in the community and educate the youth and their parent and guardians on the importance of financial literacy. And then naturally, how does that fit into a banking relationship? Whether they already bank with someone or not, it provides them at least that opportunity to think through potentially what is available. And so we really focus on not being a commercial for Great Lakes Credit Union, but it's a value add to what we provide under the umbrella of our Foundation for Financial Empowerment of Great Lakes. And it fits into kind of our financial literacy strategy on being out in the community. But it certainly starts with being able to find that right connector that can open the door for you. Or we've also been successful with working with nonprofit agencies that have relationships for after school programs with schools. So that's another way for an institution to think about, well, if I can't get directly into the school, and I understand sometimes there's sensitivity around that. So work with a nonprofit partner that's providing additional programming, and then you're a piece of that puzzle that they're providing to those students after school. And that has really worked well. And that's led us over the last couple of years to even participate with those partners in summer camps, which is something newer for us over the last couple of years. But it's because of those relationships that we've developed with the nonprofit partners. I'll also say that for us, we partner with United Way in a lot of our communities, and there are different United Ways based on our field of membership. But that's also opened the door to get into the schools, but also opened the door to get into other nonprofit agencies that are providing this type of support. And so it's just over time, building upon that, developing those relationships, keeping those relationships. And recently our team was telling me, Steve, we have so many requests coming in now. We need to amp up having our employees volunteer for these programs because we're getting so many requests. And so we've even been able to reach out to some other credit unions that serve the same market to say, could you partner with us or partner with this organization? We can't do it on our own. And we've had great participation from some other credit unions locally where we've been able to really divide and conquer because it's just more than what we can handle with the staff that we would have available. So that collaboration in the industry is just tremendous, John. And we all want the same thing. We want to start early and we want to have that consistent message. And then we want to take that to that parent and guardian and help them out because we understand parent and guardians are really, really overwhelmed today with everything going on. And so can we help support what they're trying to provide, for the youngsters under their care?
That all makes sense. And that is true. I think everybody, when you ask them, do you want to start early? Do you want to help parents? They're all going to say that that's the case. Most institutions will say that, but you do need the kind of shining lights like Great Lakes is to kind of lead the way. So thank you for that. Next, let's just look to the future. So looking kind of 5 to 10 years out, what role do you see credit unions playing in equipping families with financial literacy or money smarts? And how is Great Lakes preparing now to meet those evolving needs of both parents and children?
Another great question. And I go back to, as we've seen our industry evolve and change over time, we need to continue to evolve and change the programming and the services that we provide. At Great Lakes, we've made the decision to move all of our philanthropic efforts under our foundation, and it's an individual public foundation. We have an agreement that they provide the services back to Great Lakes. Financial literacy falls under that. So part of that strategy, John, was to place more emphasis on the development of financial literacy programs. We are one of a handful credit unions that has a HUD certified counseling program. So this is under their umbrella. And so they use those resources and tools to help equip us when we're out in the community. And then partnering with folks like you that also can provide that content. So a lot of times we don't need to recreate or recraft because the content is there. So really aligning yourself as an institution with the right partner that continues to evolve and change. And I know you and I've had that discussion over time of we've launched Adolescents and Money Mammals, how that's even evolved over time. So I think that focus and strategically for credit unions is part of our DNA. That is not going to change. What will change is the delivery of how we offer that programming out to the youth. And part of that goes back to the educational system. And I really hope and desire that from an educational perspective in all of the states, take a more active approach to being able to offer programming that goes back to the basics of providing financial literacy. And then credit unions, financial institutions can overlay their programming on top of that. But just as we didn't have iPads before and it was more of a traditional approach, now we have iPads and now we have apps, right? It's that evolution and being able to provide those tools. And I do see, and this is interesting, gaming becoming much more relevant than it was even 2 or 3 years ago. And so I think that goes back to the way that we're teaching the youth today in a meaningful way, but utilizing gaming. And so for teaching financial literacy, how can we utilize more of that gaming infrastructure? And I really think that that's why the Save to Win program, which is a national saving program, has had sustained success over time because it is based on having an opportunity to win additional money by the more you deposit into that Save to Win account. So even that has amplified younger adults, even middle-aged adults to save. Take that same concept and bring that down a couple levels to the youth of today. So in the future, I believe that evolution, that gaming technology, more app-based programming is going to come into play. And then how do you take that and interweave that into your banking app, right? So that there are more educational components that are tied into the app that aren't on a standalone individual basis, right? So you're not just going to have an app for financial literacy, but embed that into your actual banking app, right? So giving people that opportunity, they pull up one app, not only are banking services there, but also those educational resources as well. So the same way we think about how can we provide credit report information to adults and how they can improve their credit score through our online app today. So think about that for the youth of tomorrow. How can we provide meaningful, useful tools and resources that are embedded into that same banking app that is really focused on providing those products and services that are relevant to those age groups? And I know there's some great institutions and partners out there today that are working on those solutions. And I see more of those solutions becoming readily available in the future.
Very interesting. I'm curious, you mentioned the counseling. At the beginning of our conversation, you mentioned behavior, which I think is really important because we're talking a lot about financial literacy and financial literacy knowledge, but knowledge without behavior change is not really going to move the needle, right? So in your experience or in your team's experience, kind of what practices or programs most effectively move families from simply knowing about money? Because I think very often mistake's not the right word. I think there's a misconception of what we really all want to be doing, which is we want to be helping people build money smart behaviors, because those are the things that are going to lead to people ultimately becoming financially independent. And so we think that just having knowledge is the answer, but having knowledge is not the answer, right? Really, the behaviors that you touched upon right from the beginning is the key. So how do you move families? And you can address this separately as parents and kids and however you might want to think about it, but from knowing about money to actually building opportunity for their kids. And to the extent that your counselors address this, that would be great. And how might other credit unions or parents replicate that type of success?
So I think all parents, all guardians want their children to have a better life than perhaps what they had or have. And so by focusing on the youth early on and building smart financial decision making, because you start early, you're not necessarily breaking bad habits, because these youth, if you start young enough, haven't really developed perhaps those bad behaviors. So the key with the youth is if you start early, right, and make sure that you build upon that ongoing consistent message, utilizing those financial educational tools and resources to help them as they move through that life journey to make better informed decisions is critical. Most parents will recognize the fact that perhaps they themselves would have done better if they would have had those same opportunities when they were younger. And so we could all look back in our financial journey as adults and say, you know what? If I knew this or had the ability to use this resource or tool, I would have made probably better decisions along my financial life journey. So to change an adult's behavior is a little bit more difficult, because you're changing whatever that behavior is into a positive. And as we know, a lot of adults, they want to do that, but then the actions don't follow up. So that's why through our counseling program for our HUD certified counselors, it's both parties, the counselor, the client, are agreeing to implement action steps going forward. Those that do and follow through typically are successful. If, for whatever reason, that client doesn't, then we see those behaviors not change. So what we want to make sure is that from an adult perspective, we're providing that follow-up, that connection on an ongoing basis, where everybody's keeping the appointments, whether it's virtual or in person, and those clients of ours are agreeing and then doing the right things for that action that was assigned. And we have great examples of success on the budgeting side, the saving side, purchasing cars and homes through our counseling program. But you're right, sometimes you just can't break those habits. And our counselors get very emotionally tied into their clients, and they're devastated when a client does not fulfill that commitment that they've made. And my advice and guidance back to the team is, as long as you know that you're providing the right tools and resources and you're holding true to what you've agreed to, that's all that we can do. On the youth side, much different, because if it starts early and you build that behavior over time, even though the parent may not have that best behavior, you can ingrain that back into that student. And what we hope with our programming, John, is then the student can take that back home. Then the parent or guardian's like, oh, you know what? That's right. I need to really think about that for myself. And I even find that today, when I'm providing those tools to our son and daughter-in-law for our grandson, because it gets me thinking about, gosh, do I need to look at my spending habits differently? Or I go back to when I was in college, making a bad decision on having a lot of fun on that credit card, and then calling mom or dad and saying, uh-oh, you know what? I have this credit card bill, right? What am I going to do? What do my parents say? Well, you have a job. I guess you're going to have to work more hours because you're going to have to pay that. Not paying that is not good, and we're not going to cover that for you, right? So I may have had to learn the hard way, but I think about if, when I was younger, I had more of the resources and tools that we can provide today through Adolescence, Money Manners, Bite of Reality, or whatever that content is, right? It probably would have put me on a better financial path than the path that I went down early on in my adult life.
Well, those are some very interesting insights, Steve. I wanted to piggyback on a few things that you said. So one, this idea of the money smart journey. We've really evolved from a youth account program to a family financial wellness program. And it's because just like you have gone on the journey with, your son and now your grandson, I've gone on this journey. You can only learn it through time, that you learn as much as your kids do. And if you're open to that and you can use the past mistakes as ways of helping them to get some perspective, they're ultimately going to learn through their own experiences. But this idea of being on the money smart journey together is really a wonderful opportunity for us as parents and even as grandparents. So that's one. And then the other one that that you mentioned is, this is just music to my ears, the idea that building good money habits early is much better than trying to break bad money habits later. And that really is at the crux of starting this journey with our kids early. I am curious, this is a very tactical question, but I went through one of the counseling programs through CUNA and now America's Credit Unions. And one of the issues that came up was the idea of keeping appointments. And you had mentioned that that's something that your team prides itself on doing, because that seems to be one of the biggest problems, is getting folks to keep those counseling or coaching appointments. And any insight you have from your team about how you do that effectively, I think would be helpful to know.
So, challenge for sure. So we keep communicating out multiple times through that client's, and some clients may need more interaction than others, but our counselors work with their clients, and as they're setting those next delivery dates for whether it's a follow-up or something they're going to submit, they continually follow up. They'll email, they'll text, they'll leave a message. And so don't forget, we have a meeting coming up in a month. Are you on track? Couple weeks out, these are the items that are due. Are you able to provide those on our next follow-up meeting? And then when we're in person, if they're to provide something, get them to say, yes, they were able to do that, or no, here's why. And then to your point, if it's behavior-based, the counselors are then trying to kind of work backwards to say, all right, how can we pivot? Because we don't want them to lose interest. So we want to be cognizant of what they're telling us. So it's those active listening skills that our counselors are very good at over time, right? And then they'll hone in to say, all right, maybe we need to look at the timeline differently. Maybe it's the content, but we want to constantly and continually follow up. And so we find if we continue to put those reminders in place for the clients, we are much more successful on getting them to attend that follow-up visit. Again, COVID taught us we can do some of that virtually, but our counselors still have clients that love to come in. And so those are the appointments also that we see typically are kept at a greater percentage than the virtual ones. So it's those counselors that are dealing with clients virtually that we know we need to put extra effort into that follow-up, because it's much easier, as we all know, to not accept virtually or to show up versus showing up in person. And I would say our counselors are spread throughout our field of membership in Northern Illinois. So we do try to provide, to the best of our ability, that flexibility and convenience to meet at one of our 22 financial wellness centers. Certainly virtually, they can be connected at any place, right? We also, I think the other thing is we overlay opportunities for seminars and workshops. So it's just not that one-on-one counseling. We'll then say, we have a budgeting seminar coming up. You can register for that. So overlaying additional programming is another great way for our counselors to stay in constant contact. And even after they fulfill that requirement with us, we don't forget about them. We want to do future check-ins and then also offering them our programming so they go on our automatic email follow-up list for upcoming seminars, right, or workshops. And that's a great way because it's not a one and done. If you're changing behavior, you got to continually move through the peaks and valleys that client is experiencing. So we want to be there every step of the way. And we have some of our clients continue to come back for an annual checkup with their counselor just to say, here's where I am, or gosh, you know what? I fell backwards, but I realized it. Here's what I did. Or can you help me? And so our counselors like those repeat clients because they are able to help them. And a lot of times we get great success stories with these clients. They'll say, you know what? I utilize what I've learned from you with my family, right? Whether it be a child, grandchild, maybe it's a spouse, a significant other. And that makes us really proud that we are doing the right thing. And if we can take one small step at a time and build upon that, we know those clients, those members, those communities will be much better off.
That all makes sense. The one thing that seems odd to me is why is it, and I'm not sure if we'll be able to answer this question on the podcast, but why is it that people, because you're right, people can opt out of a virtual conversation pretty easily, but it's a heck of a lot harder to have a physical conversation. I mean, in terms of the actual time that you have to get in the car and get over there, take the bus or whatever it might be to get to your counselor. Do you have any quick insight as to why it is that people find the virtual much easier to get out of than the physical?
Yeah, I think my point of view on that is, right, it's just the times we're in. COVID taught us good lessons, but also some bad things, right? And so I think from the virtual side of the business, it is much easier just to say, forget about it. I got something else going on. They're not going to miss me, right? And that's why the success of those in-person meetings is proportionately so much higher, right? Because to your point, John, they're committing to get in the car or get on public transportation to be there. So the planning for that, because you have to allow time on each side, takes a lot more time than to say, I know I got a virtual meeting coming up and I'm going to just pop on, right? Then something comes up, they skip it, right? So even when we have in-person workshops or seminars, we see better success than if we just have virtual type opportunities. And I think it's just part of human nature. So either that, or we need to also educate folks. You need to plan for that virtual session, just like you're planning for that in-person. That is why our counselors do assign activities and action items, because if you're preparing for that, you're probably more likely to jump on that virtual call because you want to let your counselor know that you completed it or you're working on it or you have questions. If it's just a conversation, it is so easy just to ignore that. And if you have a relationship, right, much harder for you to back out of. If you know that person, you're counting on that person. So we'll play the relationship card, but ideally, if we're assigning those action items and people are being held accountable, so it's that accountability that I think plays into whether it's success virtually or in person, right? You have to have that accountability on both sides.
And I think, once you've invested, it's smart that your team's doing it that way, because once they've invested some time, they're much more likely to show up there and you've built that relationship. So I wanted to ask you before we head into our fast and fun round, Steve, I want to ask you a few general questions that I like to ask guests. One of them is, who's been the most influential person in your life when it comes to money?
So this may a bit old school or traditional, but I will put it out there. I think Dave Ramsey has done a great job. And I love the series of materials over time that Dave Ramsey has developed. And if you go back to the beginning and really think about the total money makeover, right, as a good starting point, and really utilizing that book as the basis, right, for then how he built upon that going forward in the future. But it all goes back to the basics. And I remember Dave Ramsey and reading those books many, many years ago, but still refer to those basic saving models and utilize that not only myself, but also with our son and even, with our grandson today.
What is something about money that you believe that most people think is the opposite?
Yeah, so, sometimes I get the impression that folks think that money, right, is the end all to everything, right? That it'll solve everything. And my philosophy is a bit different. It's what is the value of money to you? And that may differ from what is that value of money to me. So I really think we each need our own goals and objectives that are individualized for who we are and what are those goals and objectives individually that we want to accomplish in our life. And a lot of times, I think we certainly want to make sure that we have the right savings goals, that we're paying the debts that we have. But equally important to the model that I believe in is that give back. So equally, when I look at my savings buckets, or my wife and I do, right, part of the savings bucket not only is to put money in savings for our future, whether it be retirement or to leave something hopefully to our children or grandson, but also how do we save to give back, right? So we have a bucket set aside for give back money that we also put into and save that we can help the community. And so it goes back to the value and what do you value? And working at the credit union and being in the credit union industry for 17 years, I am truly amazed at a lot of our low income members that honestly don't have a lot of financial wealth to give back. But I will tell you that those that participate in our give back programs at the credit union percentually are at a higher rate than those mid-market and upscale members. So those low income members, they're following our financial literacy programs, but equally, they really appreciate that ability to help others. So they're trying to put some money away where they can give back and step up and help others in need. And I just find that remarkable and rewarding, where they're able to participate and give back in a meaningful way. And I think it tells me something about human nature and the desire that we all have from the heart to want to help out others that are in need. And so even though those individuals may struggle, they do find a way to make that happen as well. And I just think when you step back today and look at the world we live in, that's certainly rewarding to me to know that there are individuals that are still caring like that. And it goes back to my philosophy of you want to treat others the way that you want to be treated. And so if you can help others and give back, whatever that means, I think that that's just amazing. And it just really helps me ground myself that they're still great individuals, that even though they're challenged in multiple ways, will step up to the plate when needed. And again, it goes back to building that value of money and that behavior and what that looks like as well. And a lot of these individuals, John, struggle paycheck to paycheck, but they're willing to give maybe a few $100s, right, toward a charitable cause or an emergency for someone else, which I just think is remarkable.
I appreciate your kind of outlook. It's a nice positive outlook that I think is much needed. So thank you, Steve. Are you prepared for the fast and fun round gauntlet?
Sure. Throw them at me. We'll see what comes up, right?
All right, here we go. First question, what does the term money empowered mean to you?
So we talked a lot about that. It's the utilization of those financial resources and tools to really help you make a better informed financial decision in the future. And again, starting young helps, because hopefully if you start young, you're going to remember those things through your life journey.
What is the best investment of time or money you ever spent on your son or your grandson?
Again, I'll go back to the iPad loaded with financial interactive programming, because he is on that thing all the time and he learns from that, and it just amazes me, right? So keeping that content current and finding those programs that, number one, captures his attention and is interactive where he can learn has been a great way to invest. But utilizing that with traditional resources of also providing a piggy bank and then putting money in the piggy bank at certain times to then have him take that, go to the credit union, put it in the account, and watch it grow over time.
Very nice. If you could go back and tell your younger self one thing about money, what would it be?
To really recognize early on the value of money and how that can impact your decision making along life's journey. And I made a lot of bad financial decisions when I was young. I utilized earlier the credit card mistake, right? But same thing about, well, did I really need the kind of first car I got, right? Or did I need to spend the money when I was out on my own on the kind of apartment I got when I was first out on my own? And then what I've always told my son, which he did take this advice when he started working, is maximize your 401k, right? Don't leave money on the table with your employer or whomever is investing in that plan, because as you build that up over time, that's significant. And we're going to have to rely on those savings because we know Social Security probably isn't going to cut it in the future. So even our younger employees now, when we onboard them, it's like, look, we offer a great match program on the 401k. Please, please, please participate. Don't leave money on the table because you're going to regret that in the future.
Great advice. So Steve, if you could transmit a message that everyone would see, what would that message say?
I'll go back and reiterate kind of what I just said a couple minutes ago. Just treat others the way you wanted to be treated. It's challenging, right? The world we live in today. And if everybody could just take a deep breath at times and back up and be in the world we operate in, we all have different opinions, right? We come from different diverse backgrounds, which is so important, but we need to be active listeners. We need to be engaging in conversation and communication, even when we have opposing views. So I do think it goes back to just remember, treat others the way that you would want to be treated. Simple, straightforward.
Very nice. That makes sense. So what is, other than Dave Ramsey, what's one Money Smarts book, podcast, or media that you recommend or give to others most often?
Yeah, I think the going back to Total Money Makeover is a great starting point because it talks to you about savings and how you could look at saving by category, right? And then setting aside appropriately. And I think that's something that youth, young adults all can understand. So I really like that first series because it really does take you back to the basics. And I don't care how well educated you are, what role or position you have. A lot of times we all need to step back and go back to those basics, right? We do it in sports all the time. Why wouldn't you do it in your financial journey as well? So sometimes I think we try to get too far ahead of ourselves. So if you pull that back, John, and just go back and focus on the basics, which is why I really like that Dave Ramsey focus.
Yeah, the simplicity side of things is, I think, very often underrated in the financial world. And I think it's good to be able to step back 50,000 foot view and do that periodically.
Absolutely.
So Steve, how can you've gotten through the fast and fun round gauntlet? Congratulations.
Thank you.
To the extent that you want people to find you, how can people find you and what you're doing there at Great Lakes online?
So glcu.org has a lot of content on our public website, but certainly if anybody has any topic, they want to follow up on anything else, steveb@glcu.org is my email address. Even from the collaboration standpoint, John, you know our industry is really good about collaboration, sharing ideas. We don't all need to recreate things. I learn every day from others in the industry. So even just to talk about ideas and suggestions, I always learn from others, even just by having a conversation, right? I learned a lot today. So feel free to reach out. Happy to share, happy to have a conversation, or just even to connect with other like-minded individuals.
Well, speaking of learning a lot today, I did as well. And Steve, I appreciate you coming on the podcast and sharing your insights as a CEO, as a parent, and as a grandparent. So thanks again.
Thanks for having me, John, and thanks for all the good work you do in the industry as well.